This video is all about 401ks and solo 401ks and what they are and how they're different and everything you need to know. Morning, Brian.
Morning, Tim.
So again, I profess total ignorance in these matters. A 401k, could you tell me a little bit about what it is and how it's different from a solo 401k?
Sure. A 401k, just to contrast with an IRA, is an employer-sponsored program.
Okay.
And with a 401k, you can put aside more money than in an IRA towards retirement. A solo 401k is specifically designed for a person that has self-employment income.
Okay, so you run your own business.
Exactly. A person that runs their own business, or a contractor, a person that actually owns their own business. It could be a real estate agent, all kinds of people that basically work for themselves.
Okay.
That's a product which enables you to put away even more money than in a traditional 401k, and with a lot more flexibility in certain ways than a traditional IRA as well.
Okay, good. So an IRA is about putting aside money for your retirement, and the 401k, particularly the solo 401k, is about doing the same thing, but if I'm self-employed.
Correct.
So what are some of the advantages of a solo 401k? What are some of the things you get to do?
Sure. Well, number one, you can put away a lot more money in a solo 401k. Currently, a person who's under the age of 50 can actually put away up to $53,000 a year, whereas a person over the age of 50 can actually put away up to $59,000 a year. One of the few benefits of being older, I guess.
Yeah, that's if you happen to have that amount of loose cash lying around.
Absolutely, absolutely. But additionally, there are other things with a solo 401k that you can do, such as borrowing against it. A person can actually borrow up to $50,000 from their solo 401k.
So now, one thing that I know about investing is that a lot of people would typically invest their 401k money in, there's some traditional means, but then there's some other things you can do. Can you tell me, what do people traditionally do with that money?
Sure. In a traditional solo 401k, one would be limited to your traditional asset classes, stocks, bonds, and mutual funds, which are fine asset classes, but they're limited. Whereas with a self-directed solo 401k, the door would be open to a much broader array of investment choices, whether it's real estate, precious metals, tax liens, private placements, or what have you. So it just enables a person as they're planning their retirement to have that broader level of diversity, which will hopefully enhance their returns, the stability of their returns, and minimize their risks as they plan towards retirement.
It sounds good to me. I mean, more options always sounds good to me. Maybe that's just kind of how I'm built. So what do I have to do to get one of these self-directed solo 401ks happening? I presume I can't just randomly do it. You've got to do something.
So we would provide a plan for you, and embedded in that plan is a trust. And you would actually be the trustee of that trust. And you would open up a bank account on behalf of the trust, and using that bank account, you would be free to invest in all of those things that the IRS permits you to invest in.
Oh, so that actually sounds pretty good, because for me, I don't like documentation and legal stuff. So you guys, and companies like you, but you guys, Broad Financial, take care of that, and I want it with a checkbook, and I can just go buy my real estate or buy my, is it that simple?
It's that simple.
It really is. Good. All right, well, thanks for your help with that. I really appreciate that.
My pleasure.
For those of you who would like to know more, please visit us online at www.broadfinancial.com, or give us a call if you've got any questions or would like to get involved, and we'll see you in the next video.